Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel and zinc.
LME 3-month nickel. The core pattern over the last summer and going into winter here that driven prices high had been the July to November ascending triangle. In November last year, the market broke up over the flat upper trend line of this pattern, which was also the August 2011 high at 25,195, and ploughed higher. Through the long moving average, currently at 25,365, the May 2011 high at 27,330, the April 2011 high at 27,950, the recent 50% Fibonacci line at 29,470, and in early December reaching up to breach the 50% Fibonacci line of the March 20 to March 2022 move at 32,945. In the process, prices rallied or reached both the primary and secondary targets for the ascending triangle at 30.70 and 32,160 respectively. Yet in this move higher there were the seeds of its own decline, however limited. That may or may not be, plus the beginnings of another possible pattern. You see, that session high, the highest market since April last year, ended as a combined bearish dark cloud cover pattern, bearish closing black mirror bozo, and a shooting star pattern, type 1 bearish. Prices subsequently fell to the May 2011 high at 27,330 before recovering, and this is where it all becomes interesting. Last week I said, and I quote, "This leaves us with an interesting if complex situation." You see, one could look at the whole of the early November to date action as a possible complex head and shoulders top with a split head. It will all now depend on whether the market first makes a move down to the proposed neckline of the pattern, and that's currently at 26,695 and highlighted in dark blue, and then what it does when it gets there, end of quote. Okay, so fair enough, I'd seen a potential head and shoulders top and I'd highlighted it. All very sound analysis. However, I took a close look at the action from November last year to January this year, and there is another more acute head and shoulders pattern in there as well. Now I've highlighted the neckline of this one in purple to help aid viewing of it. It is much more acute and I consequently have doubts about it, but the significant feature is that the neckline has been broken on the downside and we're currently on the pullback from that, but only so far, as the now 3-pointer downtrend generated on this smaller and more acute head and shoulders top, currently at 29,940. Indeed, yesterday was the third of the 3-pointer touches of this downtrend. And I've highlighted that downtrend in bright red on my daily chart. This makes for interesting viewing on what will happen for the rest of this week. This does not take away from anything from the larger incomplete potential head and shoulders top at this time. Thus, I'm minded to place some potential targets on the downside for this acute head and shoulders top. So a primary target X would be in the 25,080 zone, and a harder to reach secondary target X1 will be down in the 21,390 zone. Now, the fly in the ointment. Yes, there is always a but to everything. Okay, so these head and shoulders tops are fine, but what if one or both of the head and shoulders patterns turns out to be a head and shoulders continuation pattern, or patterns, or even something else completely? Well then, I think that is a really good question, as having such a pair of such patterns at the same time may lend itself to such an outcome. So the only thing I can say to that is to keep a close eye on any such deviation in one or both of these patterns. LME 3-month zinc. There's a hell of a lot going on here, which just about describes all the multicolored trend lines and patterns seen here. Back in November last year, the market broke down through the lower time, currently 28.84, and highlighted in bright red on my daily chart of the big old 2015 to 2020 bullish Andrews pitchfork. However, this was repaired within a week, and it continues to hold up the market, along with the congestion between 27.91 to 28.25, which included within it the June 2021 low at 28.10, the July 2021 low at 29.06, and the August 2021 low at 29.17. All these played their role in supporting the lower time and the market. At the end of November, prices pushed up over the middle time, currently at 29.03, which is highlighted here in purple, of the more recent late May, mid-August bearish shift pitchfork. using it as a base to push up over the medium moving average, currently 31.47, and reaching up to the 50% Fibonacci line of the March 20 to March 22 move at 33.29, and that's in the middle of December. Prices failed there and moved back down again to the middle time. In all this action from September to December last year, we saw the construction of a reverse head and shoulders pattern. The neckline, currently 31.85, is highlighted in green, and it's fairly flat. Anyway, prices hesitated just over the middle time during Christmas, as well as the support based around the April 2019 high at 29.59, plus a combination of the August 2021 low at 29.17, and finally the July 2021 low at 29.05, before moving up through the neckline 3 weeks ago. Then 2 weeks ago, prices significantly moved up over the declining long moving average, currently at 32.84, the first time since August last year. The rise continued such that last week the market breached the upper time, currently at 34.38, and that's highlighted in purple. The breach was just a breach, and this week seems to be trying to repair itself, but it's still too early to see if this breach will become a full break or a full repair. So what has all this left us with? Well, firstly, I've previously spoken about the reverse head and shoulders pattern, and this has a primary target X1 in the 35.47 area, and a secondary harder to reach target X2 in the 36.95 area. If the market holds around or over the upper time, then the target X1 is definitely doable. Next, we have something I've spoken about a lot. It is the March 2020 to June 2022 ascending expanding wedge pattern. Currently 40.11 to way up off the top of my daily chart. So far it is actually immaterial. The lower trend line is highlighted in dark blue in the upper part of my daily chart. There are some outlandish potential targets for such a long dated and wide pattern, so to keep an element of realism here, I would suggest only looking at just the possible primary target X for such a pattern, and that is in the 25.45 zone below. This is one for the back of the diary and to be reviewed maybe once a year or so. However, any failure of the rally from the previously mentioned reverse head and shoulder may highlight this longer term pattern. This leaves only the shallowly bearish recent late May to mid-August bearish shift picture, the purple one again. Recently we've seen the middle time with some finessing holding the market up, and the upper time acting as a potentially good source of resistance right now. I suggest watching this one closely as it holds some interesting opportunities, especially if it reinvigorates the bearish angle of attack.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.